Earnings season picks up this week. We get reports from McDonald's. We're going to be hearing from Boeing, Caterpillar, Ford, Microsoft is on the docket. Then we hear from Amazon and so much more. You can just see it right there on the screen. We can hear from Verizon, Barclays, Intel, 3M, Visa, and so many others. Here to get us ready for the trading week ahead, JJ Kinahan, Chief Market Strategist at TD Ameritrade. JJ, great to see you.
Good morning, Andrew.
Your sense of how these earnings are going to come in, I imagine they're actually going to be pretty good, but that's in part because so many on the list already told us they were going to be bad.
Yeah, exactly. So the expectations are low. We're off to a very good start. I do think, though, some of the technology stocks may be a little bit more at risk overall. I mean, the one thing that we kind of already knew as the earnings season started was that the consumer was incredibly healthy. Obviously, early innings, so to speak, in terms of the earnings that come out. But, you know, even Mr. Diamond, when he made his talk about, after the Chase earnings, talked about how healthy the consumer is. But as he said there, and I think it's a theme that's going across the industry, is what are technology stocks doing, and is the demand going to continue to be there as we continue with this uncertainty in China overall? The primary concern I've had going into this earnings season, and I don't think it's going to change, is that infrastructure is something that's not being spent on right now from companies because,
right.
Let's face it, why take that risk right now when you don't know what's going to come out of it? And so that's the type of thing that not only hurts you in the short term, but 2 years down the line can come back to bite you also. So that's the primary thing I'm going to listen for.
So, JJ, when you say tech, though, is the issue, are you thinking that the numbers aren't going to come in where you want them to be, or are you thinking that when we get on the phone call, meaning when the CEOs start talking, that you're going to start seeing projections that are ugly going forward?
It's more the latter, Andrew, to be honest with you. I think this quarter will be fine, but I think you may see some muted expectations going forward as, again, the demand, we've seen some signs that demand might be fading a little bit. I'm not saying it's going to be a complete disaster.
And again, I'm assuming you're talking microchips of the Intels of the world, AMDs of the world. You're not thinking consumer tech.
Absolutely. Intel is really the one coming up this week that kind of leaps to mind right away, maybe a little bit more on the hardware side of Microsoft also.
If you were trying to position yourself on a Monday morning, as in today, ahead of all this, you would do what?
First of all, for those, I think one of the things that people do is they take, particularly from retail investors who watch your show, is they take flyers on stocks and they're like, oh, this stock's coming up, I should trade it because I hear they're having earnings tomorrow. So number one, do a little research and limit the amount of stocks you're going to expose yourself to. And the second thing is in the overall market, we've had a lot of trouble getting through 3,000 on the S&P 500. We're not very far away from that right now, so I'd be a little bit concerned as we head up there, considering what's going on worldwide, considering we, still have a Brexit vote, which nobody truly, I think, knows what's going to happen there. And again, the news from China, one day positive, next day negative. I'd be very careful about getting too long here until you see that we can break through this 3,000 level convincingly.